So pretty light week as far as data that comes out that's going to influence the markets, but there's still a lot of market influence going to happen just because people are going to be kind of trepidatious on how things are going with how the Fed's reacting to things, or at least the chairman talking about, hey, we would have dropped rates if we didn't have tariffs, so causing a little bit more grief. But dropping rates again, that hasn't really had that effect on mortgage rates as other things do. So trying to understand what drives interest rates. I know you guys that are listening to me here, you guys know because you've listened to me talk about it and you see the outcome because I'm showing you in real time what's happening in the markets. But we do have those Fed minutes coming out later this week, and that's going to be and it can have some impact, right? Because the market's going to try and shift their money around where they believe they will make a return on investment. Is it into equities, stocks, or is it going to go into bonds for a little bit of a hold and wait? Are they going to go into something else, crypto, precious metals, other commodities? What are we going to do with our money? So that's going to be pushed around. What's interesting, these last few months, we've seen stock and bonds go in tandem, not opposite like they used to do. So it's hard to gauge. And the best thing I can do is look at that price action and see what's going to impact me. So we're going to have those Fed minutes. We're going to have the jobless claims numbers come out today. There's consumer credit information hitting later on today, but I think a lot of it's just going to be all the saber rattling that's going back and forth between all the geopolitical stuff. And then of course you have the distraction that we have happening here with, there is no Epstein list, and didn't do those things, and Epstein killed himself. So who the hell knows anymore? It's very, very, very evident that there's other forces at play that we don't understand, nor do we get to understand. We just have to suck it up and deal with it. And I think that's the part that we, as Americans, are supposed to be living in a free country and have to be able to decide for ourselves. It's having a hard time with the fact that we just can get people tell us to do whatever the hell, tell us shit that we know is wrong. We just have to just deal with that. Getting harder and harder to swallow. But let's take a look at the market because that's why you're here. You're not here to talk about that kind of thing. So we're looking at the mortgage-backed securities, of course, and this is what's going to drive your conventional rates. This is what's going to drive your Fannie Freddie loans. Not going to drive your DSCR. DSCR actually hasn't moved a whole heck of a lot because that's a private label security. It's capital that's being invested, and as it pulls out, they'll have to reinvest more into it. Those reinvestments of that capital, the payments that come in, it's what driving that volume of capital available there. These are not tracked anywhere that I can see. So we haven't seen a lot of movement there. We're able to price those out and they stay pretty steady. But unless there's monster movement, like when there's all this massive movement, we did see money leave those pools. And of course, the rates did go up with the mortgage-backed securities, or at least the security that funds DSCR. Now we're looking at this particular scenario when it comes to conventional loans. As you look, we peaked out. We're heading right back down. We've got some support coming below us here. We do have moving averages that act as a support, and I think I don't have the legend up there to be able to tell you which moving average that was. They hit there and supported us on that one. But we also going to see, look at this big old range we've got here, this monster range that we're going to trade within. We don't quite touch that bottom where it's in a narrowing range. If you really consider it, how wide this was trading, and then it kind of narrowed down, right? And that's narrowing even more. So we could be into a little bit more of a narrower range, probably from here to here. And that range looks to me to be somewhere in the range of about, let me see here, let's say it's a 200 basis point range that we'll be moving around in. That would mean if you got one specific interest rate you focused on, it would move on a conventional basis 2 points in cost, either up or down. So that's basically what we're looking at there, that tightening range. And a lot of it has to do with, it's like there's just really no direction. You have demand going to the Fed to lower the rates. He's saying, hey, we're not in an economic position to lower the rates. Now, lowering the rates in reality is only going to drive up these rates because it's an inflationary move. Inflation means when money gets cheaper, people spend more of it, things cost more because it's the more demand on it. Therefore, inflation goes up, causes this to move the opposite direction and pushes up interest rates. That's just the standard way things have gone. I know that we get the talking heads everywhere else out there trying to say otherwise, but they don't understand what they're talking about. Unfortunately, traditionally, at least in the past, they may have had some influence, not having the same kind of influence that I could tell, and I could be wrong. I can be very wrong, and I don't mind being wrong, especially when it comes to rates going down. But I don't think that we're going to see them go down much. We have a 200 basis point swing in there, and I believe that's where we're going to play for the foreseeable future, especially when you're talking about the kind of battling you've got going on when it comes to politics presently, and a lot of the, hey, look over here and look at what's going on over here while we're messing around things over in this side of it. So I will get you more updates at the end of the week. Just wanted to give you that data. Not a whole lot to talk about right now, but we are off the lows as far as rates are concerned, going to some higher directions, and we'll just see how that plays out as we go forward. But DSCR stayed pretty still. So we're doing DSCR loans. Let's just get those, lock them up, and keep moving forward. To me, that's the best way to go. Get your LLCs. If you don't have those LLCs, you don't have your trust, you don't have your holding companies, call me, reach out to me. I'll get you connected with some people that you can talk to and decide for yourself if it makes sense. But I personally think that's the best way to go. That's how I operate. I believe this should be something you should be looking at yourself. Take care.